When you look at the North American marketplace and the developments that have occurred in tight oil as well as in unconventional gas, ultimately resulting in low-cost energy and low-cost feedstocks for the petrochemical industry, it's resulted in a resurgence, essentially a renaissance for North American petrochemicals. So after more than a decade of literally no investment in new capacity, we're now looking at substantial investment between now and the next 5 to 10 years that will result in a very strong and significant increase in new capacity. When you look at that increase in new capacity relative to the fundamental demand growth domestically in North America, it will result in a sudden increase and certainly a surge in exports out of this region. So when you think about regional trade in the petrochemical sense, the first thing you need to remember is there's not necessarily one size that fits all. But when we think about base petrochemicals and plastics and the trade that exists between the Americas, between Europe, Middle East, and with Asia, the fundamental factors that influence that trade essentially are the rate of domestic demand growth as compared to the rate at which a region is increasing its domestic capacity to produce those products. For those regions that are low cost and have slower demand growth, essentially they will build more assets than the domestic market can consume, and therefore they'll be net exporters. Or vice versa, such as is the case with China, they have a domestic demand growth that is significantly stronger than their ability to build new capacity to supply that demand, and therefore they rely heavily on the outside world to supply them products so that they can meet their domestic demand. When we think about the fundamentals that influence regional trade, looking at the current state, which essentially breaks down between low-cost regions and high-cost regions, we see the low-cost regions like North America and the Middle East being incremental net exporters to the rest of the world. Other regions that are higher cost, such as Latin America, Europe, parts of Asia, especially China, are net importers. That's where we sit today. As new capacity comes on stream in North America, we see North America becoming a much larger and a much more significant net exporter of petrochemicals and plastics into the future. Again, the domestic market is just not growing fast enough to absorb all the new capacity. North America will likely push product first into Latin America, will push into Europe, and we will also see North America continuing export into the Asian marketplace. Middle East will continue to play the role that they've played for many years, which is an incremental net supplier, net exporter into the international market, mainly going into China. China is an interesting case. China is also building a lot of new domestic capacity, which will start to impact the amount of product that they need to import. For certain markets, this will create some short-term imbalances as they bring this new capacity on stream. Clearly, when you look at the potential and continued expansion of net trade in petrochemicals and plastics, the clear winners are what I would call the logistics companies. In order for all of the capacity that will be built and shipped around the world, there's a significant amount of what I would call, again, logistics investments that has to support that. Otherwise, the product doesn't move. So the shipping companies, the packaging companies, the container companies, these are the companies that have to be expanding their capabilities in all parts of the world in order to facilitate this growth in capacity and this increasing net trade of products. One example to think about is if you just look at ethylene derivatives. If you go back to the late 90s, the early 2000s, and look at what we're forecasting by the year 2020 to 2025, you're probably looking at almost a tenfold increase in the net trade of ethylene derivatives as we build more capacity in lower demand centers and ship that capacity to areas of the world that are growing at a faster rate. On the loser side of the equation, really it becomes those countries or those companies that are high cost and have import exposure. So if I'm sitting in a country and I'm operating in a very high cost position and it is easy for imports to come into my country, then I could potentially feel, especially in an oversupply situation, a very competitive situation developing in my own backyard, which could put more pressure on me, cause me to run at lower rates, or even force me to shut down.